Hello everyone. This is the pre-market report video for today, 6th June 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Again, yesterday it's another election related day influence on the market. As I explained in the last video, like how in 2004 until that first mandatory floor test, I'm expecting market will be just reacting to the government formation. Yesterday, Nifty opened and traded relatively flat for the first 2 hours, but then Chandrababu Naidu made the announcement that he will support NDA. As a consequence, market raised some. Followed by PM Modi made the announcement that on June 8th he is going to sworn in as the third time PM, which again raised the market further. In addition, yesterday was Bank Nifty expiry, so that related short covering also helped on the positive side. Thus, the election related influence on the market is not yet over. Again, I hope there will not be any changes in some important ministry like Home Affairs, Finance and Road Railways, etc. If any, and if market didn't like when they announcements, that sector related stock will be straight away in focus. So it's important while trading, we have to keep an eye on political side things, and I'm really looking forward to know who got which ministry. Regarding institution, still FII haven't stopped their selling spree. On election results day, they sold for near 12,500 crore rupees, and yesterday again they sold for 5,650 crore rupees. And as usual, DIA supported the market as they bought for around 4,550 crore rupees. It seems yesterday DIA saved the market. If not DIA, then despite all these positive news like Modi forming the government, market might end up in another disastrous day. See, yesterday during our regular market trading time, there was no premium to Nifty future nor to GIFT Nifty. Usually at this day of the month, if there is a demand for Nifty means, then the future market premium will be around 100 to 150 points. Whereas even for the bearish market scenario, because of the time value, there will be at least the premium of 50 points. But yesterday it was 0. Hence, clearly Nifty's positive run was not due to demand, rather just a short covering. So, if today premium stabilizes means, then probably we can say market is returning to normal demand and supply. Anyway, moving to US, last night before the US market opening, ADP released the non-farm payroll data report. Here, as we discussed a lot of times, ADP is the biggest private payroll processing company, not the government. The government official one is due on Friday. So the data released was purely from private perspective, but still this carries a lot of weightage. Now, as per their report, in May month, the number of new private jobs employed in US grew by 1,52,000 jobs. This was less than the 1,73,000 jobs which economists had predicted. We know as per Tuesday night data, there was a decrease in number of job openings at the end of April month, which we discussed in detail in the last pre-market video. So together these reports showing more evidence and suggesting that the labor market in US was not as strong as expected. This weaker job growth is exactly what market wants and supports the interest rate cut. As a result, it improved the global momentum, so US market opened positive. In addition, from tomorrow onwards, Nvidia stock is going to split into the ratio 10:1, which made the Nvidia the third company in the world after Microsoft and Apple to reach $3 trillion US dollars. All made the US market to close positive. So in the end, Dow Jones increased 0.25%, S&P funded up by 1.18% and Nasdaq rallied to 1.95%. However, VIX was still same yesterday, just below 13. Then coming about oil, it haven't changed much. At the time of this video, Brent crude trading at 78.5 US dollars per barrel and WTI crude trading near 74.5 US dollars per barrel. Then regarding Indian ADR, please pause and have a look. All four major stocks in US traded in line with Indian market. If we calculate the arbitrage with the Indian spot price means, then for both banks and IT stocks, it's indicating flat to positive. About GIFT Nifty, today early morning it closed at 22,712. As per yesterday Indian market close, at present no premium. Equating into the spot, it's indicating 100 points gap up opening. but there is a high possibility market might build premium today. So those were the things happened yesterday and last night in the global market. Now let's look at the India specific information. First of all, I don't know the impact, but just for info, yesterday SEBI eases the FPI registration related framework. Like FPI can keep their FPI account for up to 180 days even after the expiry. Basically, they relaxed the framework. Generally, this is considered as positive. Let's see. Second, in the aftermarket filing, Kotak Bank informed SEBI that RBI granted the approval to divest their insurance arm up to 70%. So, Kotak Bank stock will be on focus. As a summary, US market, particularly Nasdaq, closed super positive, and also at present even US future market is trading marginally positive. Then in case of Indian areas, it also closed positive, but I think it just retraced the yesterday's Indian market, but still GIFT Nifty indicating gap up of 100 points. But this lack of premium in future market made me think it's not good. Moving on, as per stock open interest, Paytm, Blue Star, Cochin Shipyard and Bharat Dynamics got an increased open interest along with a negative close indicates the short build-up. On the other hand, IndusInd Bank, M&M, Bajaj Finance, Axis Bank, HDFC and Kotak Bank got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, during our market time between 12:30 to 2:30 p.m., Europe retail sales data and Germany's factory orders for May month is scheduled to release. Then in the aftermarket hours at 5:45 p.m., Europe's interest rate decision is due. At present, market expecting the first rate cut after near 2 years. And in the night for US, weekly job insurance data, new building permits and Fed balance sheet are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 230 points gap up above 22,100. Then it was volatile in the initial hours. However, it regained momentum and closed at around 22,620. Thus, it forms the green candlestick pattern with long lower shadow, which indicates the lower end buying. If we consider last 2 days together, it's bullish harami pattern. So potentially it's a reversal but need more confirmation. At present, the 21-day exponential moving average is around 22,500. This is the crucial trend decider level. If Nifty sustains above its 21-day exponential moving average, then the short-term target will be 22,800 with the immediate support at 22,000. Then in case of Bank Nifty, it opened 550 points gap up and closed above 49,000 mark. Thus, in the daily chart, similar to Nifty, it formed long green candlestick with long lower shadow. If 2 days together, then it's a bullish harami pattern. I mean, Bank Nifty is little worse than Nifty. Actually, it's 200-day moving average and then started to recover, and on the positive side, it closed above its rising trend line and 21-day exponential moving average. So the expected trading range is little wide between 47,800 immediate support and resistance 49,500. On the weekly options front, the maximum call option open interest was at 24,000 strike followed by 23,000 and 23,500 with meaningful new call option writing at 24,000 strike, then 23,600 and 23,000. Whereas on the put side, the maximum open interest was at 21,000 strike followed by 22,000 and 21,500 strike with new put option writing at 22,000 strike, then 22,100 and 21,500. Thus, the options data indicated that 23,000 is the key hurdle for Nifty, while on the support side, it's 22,000 is the key to watch out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.